Listen up right now, because if you are holding AMC or even thinking about looking at the chart today, you need to see exactly what just happened in the pre-market data, specifically regarding the borrow fee and the available share count, because we just witnessed one of the most suspicious liquidity spikes of the entire year, and I am going to break down every single number on this sheet so you understand the gravity of the situation. We are looking at the Interactive Brokers data for February 5th, 2026. And while the stock closed yesterday at $1.49 and is currently sitting in the pre-market down slightly at $1.37, the real story is happening in the lending pool, where the available shares for shorting just exploded in a way that defies the trend we saw all day yesterday. Let's rewind to yesterday, February 4th, to give you the context, because at 10:06 a.m. we had 150,000 shares available. And that number slowly crept up to 500,000 by 11:24 a.m. But then watch what happened in the afternoon, because the liquidity completely dried up, hitting 0 shares available by 1:28 p.m. and staying at basically 0 or a measly 500 shares all the way through the market close, which is exactly the kind of setup that gets everyone excited for a potential squeeze since the lenders were tapped out. But then we wake up this morning, and at exactly 7:31 a.m. Eastern Standard Time, a massive block of 1,600,000 shares just magically appeared on the table. And this is not a glitch. This is a deliberate injection of liquidity into a stock that was bone dry less than 24 hours ago. You have to ask yourself, who is making these shares available, and why are they doing it with a borrow fee that is sitting at a remarkably low 0.73%? Because usually when shares are this hard to find, you expect the cost to borrow to be skyrocketing. But instead, we are seeing a rebate of 2.91% and a fee that is barely moving, which implies that the big players are making it incredibly cheap and easy for short sellers to reload their positions right now. This 1.6 million share wall appearing instantly tells us that the scarcity we saw yesterday might have been artificial, or that a major institution has decided to unlock their vault to facilitate more downside pressure on that $1.49 price level. You can see the fee tick up slightly from 0.57% yesterday morning to 0.73% today, which is a tiny increase. But when you combine it with a volume spike of this magnitude, it signals that the game has changed overnight, and the battle for the $1.37 pre-market level is going to be intense. Do not ignore the fact that between 2:46 p.m. yesterday and 7:31 a.m. today, the entire supply and demand dynamic for lending this stock flipped on its head, and usually when we see massive blocks of lendable shares appear out of nowhere, it precedes a high-volume volatility event, so keep your eyes peeled on the opening bell, because with 1.6 million new shares of ammo provided to the bears, we are about to see if the bulls have enough strength to absorb this new supply, or if this is the start of another heavy push to the downside. And what is actually happening behind the scenes with AMC and Netflix, we need to talk about why Netflix is absolutely collapsing, trading like a debt-infested virus with their stock in freefall, and insiders like Reed Hastings dumping their shares because they know the growth story is dead, while simultaneously AMC is rising from the grave with volume that makes absolutely no sense on a day with zero news. Look at the data, because the numbers do not lie. AMC's average daily volume is supposed to be around 29 million shares, but today we are already seeing over 32 million shares changing hands, and the stock is ripping up over 5%, while the rest of the market is hesitant. This isn't just a random fluke, because we have seen 50 million volume days in 7 out of the last 10 trading sessions, which tells us that something massive is brewing in the dark pools. The bullish case is staring us right in the face, and it is compelling because the shorts are finally getting hammered on their bankruptcy thesis. They bet the house that AMC would fold, but that late January debt deal regarding the Movico and Odeon notes just kicked the can down the road to 2027 and 2029, effectively removing the immediate risk of insolvency. Combine that with a 2026 box office slate that is projected to be a $10 billion blowout, with massive hits like Avengers Doomsday, Spider-Man Brand New Day, The Mandalorian, and you have a recipe for a massive short squeeze as the bears realize they are trapped in a trade that won't go to zero. However, and this is the part that should make every single retail investor sweat, You need to ask yourself if this is a genuine recovery or the most sophisticated bull trap we have ever seen, designed to slaughter the apes who are buying weekly call options. You know the pattern. They pump the stock on no news to get retail excited, the volume spikes to 50 million to create liquidity, and then boom, the rug gets pulled. Remember that the amended note agreements allow for up to $150 million in stock offerings starting right now in February 2026. This mysterious high-volume rally, without a press release, is the perfect environment for Adam Aron to dilute shareholders again under the $2 mark. We might be cheering for the shorts to get squeezed, but we could be walking straight into a buzzsaw where the company uses your buying pressure to dump millions of new shares onto the market, crushing the momentum and leaving retail holding the bag sideways, while the premiums on those options go to zero. This is a battle between a fundamental recovery driven by a record-breaking movie slate and a technical liquidity trap set by management to raise cash. So watch the $1.60 level like a hawk, because if we reject there, the dilution machine is likely running full steam ahead, and you do not want to be the liquidity exit for a corporate cash grab. Let's talk about technicals. AMC is finally waking up, and you do not want to be the one left on the sidelines watching this rocket take off without you. We are talking about a massive surge with over 70 million in volume flooding in as the bulls completely rejected those 52-week lows and pushed the price back up to reclaim the $1.49 mark. Look at the charts because the technicals are screaming that a major move is imminent. We saw a high of $1.54, and that is exactly the line in the sand you need to be watching like a hawk. Because if we break that resistance with this kind of momentum, we are talking about a straight shot to fill the gap toward $1.65, and potentially testing that massive 50-day moving average at $1.81. The RSI is sitting at 42, which means we have so much room to run before we are even close to being overbought, and the MACD selling pressure is finally dying out. But you have to be careful because this is a war zone, and the bears are not giving up easily. If we fail to hold the VWAP at $1.48, or lose the critical floor at $1.42, we could see a flush right back down to $1.35, so you need to have your stop losses tight. The clock is ticking down to the February 24th earnings report, and volatility is about to explode. This is the setup we have been waiting for, with a risk-to-reward ratio that looks absolutely juicy for a breakout play. Are the whales loading up for a squeeze, or is this just a dead cat bounce before the next leg down? The market is deciding right now, and the only thing that matters is price action. So keep your eyes glued to that $1.54 level, because if it snaps, getting in early could be the trade of the month. Don't blink, because AMC is back in play, and things are getting spicy.